All right, just one moment. Okay. Hello, everybody. My name's Justin, Business Development Manager here at Fullerton Markets, bringing to you a special class on bullion or precious metals. Without further ado, let us begin. All right, so guys, let us first begin with what bullion actually means. All right, bullion is gold, silver, or other precious metals that maintain their value much better than currencies. All right, they're kept as a form of emergency currency by both governments and private citizens alike. Now, I'm sure you guys have, your own jewelry at home. I'm sure you guys know people who like to buy gold, some people who like to buy silver, some silver coins, for example. Okay, have you ever noticed that if, for example, somebody is cash strapped, all right, they might take out some of their jewelry to liquidate in exchange for money, okay? Usually, you do this with with your precious metals, your jewelry, such as gold watches, gold earrings, gold necklaces, gold bangles, or whatever you have, even silver, all right? So just like how the private citizens like you and I keep metals uh, keep metals so that we can liquidate them later. Governments also do the same, all right? And a whole lot of people, instead of buying jewelry, they just straight up buy, gold and silver in bars. And basically, we all do this because we know that there is very good value retention in precious metals, okay? So that's what a bullion is, something, a precious metal that will maintain its value over time. Right? So let's first take a look at the most well-known one, gold. All right, gold is traded in CFDs. That is why it is written as XAU USD. Okay, if you guys have been trading Forex, if you guys have traded before, you might notice people saying, hey, I trade gold, or I have a long position or gold, short position gold, or whatever. Okay, you can trade gold. And here at Fullerton Markets, yes, we love it when people trade gold and silver, all right? As well as platinum, of course. Now, let's talk about gold for a little bit, all right? Gold, the price of gold rather, is not that affected by supply and demand, all right? You might be wondering, how is it not that affected by supply and demand? Well, let's break it down first, all right? When we say supply and demand, meaning when new supply enters the market, the demand should go down. So, yeah, when we're dealing with supply and demand. However, the thing with gold is mined, okay? Gold is something that we mine. And the amount of gold we mine every year doesn't really affect the demand for gold. Rather, what does move gold is sentiment, all right? When people want more gold, that's it. It has less to do with the supply of gold, but rather it has more to do with people actually wanting gold or their sentiments towards gold, all right? Next, we have silver, also traded in CFDs. It is written as XAG USD, all right? Silver, just like gold, is a precious metal that people buy and they invest in. However, silver is much more volatile than gold. You might be wondering, why is silver more volatile than gold? Well, the answer is simple. Because silver, on top of being a precious metal that people invest in, it is also something used industrially, okay? A lot of electronics, a lot of a lot of things we manufacture makes use of silver, more so than gold, all right? Though gold can be used in some places, it is not to the same extent as silver, okay? And silver is also mined. There is a lot of silver being mined as well. Therefore, supply and demand does affect silver much more than it does gold. And next we have platinum. Same, traded as a CFD, it is XPT USD. Now, platinum is one of those that is not as well traded as gold or silver, but that's fine, all right? Platinum is just like gold, except for one very big difference, and that is platinum is much more rare than gold, okay? Now, during special times when there is great, turmoil, great turbulence in the world and in the markets, platinum may exceed gold in some instances. Okay, so these are the three bullion that you can usually trade at Forex brokers. All right, let us move on. All right, now let me share with you some differences between a bullion and the Forex market. The first has to do with contract size. All right, the bullion has a contract size of 100. Usually this means ounces, while in Forex the contract size is 100,000 units. All right, they both have the same minimum lot of 0.01. However, for bullion, the max lot that you can trade is 50 lots, while Forex or the currencies will allow up to 100. All right. Now leverage just depends on your account type. Okay. Now let's take a look at XAU USD or gold. All right. One lot is equivalent to 100 ounces. All right. 100 ounces of gold. The margin currency, what is traded against, is USD or yeah, USD. Now the tick size is 0.01, meaning this is the smallest price movement. Okay. The smallest tick, smallest price movement, 0.01. All right. Now the value per lot per point on XAU USD is $1. Okay. So if you were to say a price movement of 1 pip, that is 10 points, then it would be $10. Okay. So 1 point value movement at one lot is 1 USD. Okay. Next, we have silver. All right. The tick size is 0.001, an extra decimal more than gold. All right. And there's also a difference in the value. Okay. You get $5 per point per lot. All right. One lot here is 5,000 ounces. Okay. And finally, we have platinum. It's almost the same as, it's the same as gold. 100 ounces, 0.01, and 1 USD per price movement. Okay, so those are the three, and that is how they differ from Forex. All right, let's move on. So there are basically 4 factors that affect bullion prices. Excuse me. The first being monetary policy, second being demand and supply, third being geopolitical events, and fourth being natural disasters. But before we actually dive into these, let me explain to you what is a safe haven. All right. During times of market turbulence, all right, during troubled times, all right, when economies are not doing particularly well, okay, people have investments and markets will go down. However, there are a few things that you can invest in that may hold their value much better than the rest of the investments or the rest of the markets out there. Okay? And that is what a safe haven is. Safe havens are things that investors invest in to, protect the downside, to limit their exposure, limit their risks. And you guys have traded safe havens before, if you've ever traded, all right? Let me share with you some safe haven currencies, all right? The first being the dollar, okay? Second being the Japanese yen, and the third being the Swiss franc. These are safe haven currencies, okay? Now, these are just 3 currencies out of all of the currencies that we can trade, meaning not every currency is a safe haven, all right? Now, let's move on to the other safe havens, all right? Precious metals. And gold is one of them, okay? Gold retains its value incredibly well. And since it retains its value incredibly well, it is considered a safe haven as well, okay? So remember, in times of market turbulence, in times of turmoil, safe haven currencies are where you should be looking, okay? Now, which ones, all right? Now, which ones you should be looking at, that is up to you. Because different turmoils will affect the safe havens differently, all right? Not all safe havens will perform well. It's up to you to find out which ones are worth investing in, okay? For example, the Japanese yen could go up, but the USD may not, just to give an example. All right, let's move on. Now, gold as a safe haven, okay? Why is gold a safe haven? Well, the first, there are 2 reasons, basically. The first is that it retains its value incredibly well. That is right, ladies and gentlemen. Gold is nearly indestructible, virtually indestructible, all right? And gold is being mined. It's a precious metal. It is a physical it is something physical, much more physical than fiat currencies. All right. That is why gold retains its value so much better than other currencies. At the same time, at the same time, when we mine, all right, when we add more gold into the world, it doesn't really affect the prices. So the so that gold is actually quite limited in its supply. Therefore, the value is retained much better. All right, and at times of market turbulence and such, people do look at gold much more than they do the other safe havens. All right, that's why gold is such a great thing to invest in. All right, during troubled times. Now, let me read this to you guys. Right, how much gold has been mined? Well, the best estimates currently available suggest that around 197,576 tons of gold has been mined throughout history, of which around two-thirds has been mined since 1950. And since gold is virtually indestructible, this means that almost all of this metal is still around in one form or another. If every single ounce of gold were placed next to each other, the resulting cube of pure gold would only measure around 21 meters on each side. So 21 meters on each side, you can fit that, some of you can fit that in your houses, all right? But there are a few things that we can see here. The first being how much we've already mined, all right? And the second being that gold is limited. It is precious, okay? That is why gold is such a valuable, that's why gold is so valuable, simply because it is limited and it holds its value well, all right? Let me read this to you guys. US shares retreat on renewed pandemic fears, safe havens rise, all right? Do note that it says safe havens rise across the board, all right? Dollar goes up, Japanese yen goes up, Swiss franc goes up, gold goes up, okay? Why? Well, because there are pandemic fears. People are scared that economies will be shutting down again and a whole lot of problems will be coming up. The economy isn't really moving. And because of this, people look to the safe havens. And that will bring gold prices higher. If you guys recall, 2020 was when we saw record highs in gold. And that was for a couple of reasons, which we will talk about later. All right. Gold gains as investors bet on more stimulus. Once again, this is monetary policy at work. All right. Third, gold prices surges 18% this year, may rise even more to new highs as investors rush to safe havens. Okay. Gold prices did jump up. We broke the 2,000 barrier. All right. Why is this? Well, for a couple of reasons. Of course, we have the coronavirus, and then it also has to do with a lot of geopolitical turmoil, the U.S. and the China trade wars, for example. All right, all of these factors pushed people into going to safe havens, and it pushed gold to record highs. All right, now that the market is calming down a bit, gold may be losing its steam, but it could also be surging in the future. We don't know. All right, it all depends on how we get through our current predicaments. All right, here, gold rises on renewed U.S.-China trade tensions. Okay, there are tensions between the U.S. and China. Tariffs were placed by the U.S. and China, and vice versa. Now, this made people, this made people feel like, hey, it might not be a good time to invest in currencies. It might not be in currencies. I might as well buy gold because gold will retain its value. And since a lot of people have this sentiment, people will continue to buy gold as well. And if everyone is buying gold, the prices of gold will climb up. Okay? That is why investing in safe haven currencies during times of turmoil is something we should all do. All right. Last but not least, we have natural disasters. Gold gains on growing concerns about second wave of pandemic. Okay. People trust safe havens more. All right. People would trust gold more than they would normally do in their currency. All right. That's why, a lot of people have gold stashed in their homes. There are a lot of hoarders out there. The particularly wealthy have special vaults in their homes where they can put gold, and then the gold will not deteriorate. All right, you have to take special care of gold. And a lot of people, they buy jewelry, right? They keep these just in case they may need to liquidate them. Okay? So if there's one thing that we can all agree upon, it's that gold is something we should all have, something that we should look into during turbulent times. All right. Now, let me share with you guys a few tips on how we can trade the bullion profitably. All right. Now, the first has to do with geopolitical events. Okay. When there are tensions and they are rising, the prices of gold will go up. This is also one of the reasons why gold hit record highs. All right. When tensions are easing, the value of gold will go down. Example, US-China trade war. Because of that, gold has been spiking. Because of that, gold spiked. Okay? That is because there are tensions between the two countries, and this, affects the world on a larger scale. Because of these geopolitical events, tensions rose, price of gold went up. When things cooled down, the prices of gold started to lower as well. Okay? Next, global interest rates. All right? When interest rates are low, the value of gold goes up. When interest rates are high, the value of gold goes down. Let me give you an example, XAU USD. When you increase interest rates in the US, the currency, the USD, will go up. If the USD goes up, then gold, which is traded against the USD, will go down. Okay? And the reverse is true. All right? Keep that in mind. Low interest rates, gold goes up. High interest rates, gold goes down. All right? So I've already shared with you 2 tips. Let me share with you the third and the most interesting of the 3. All right? Silver and platinum mostly follow gold. All right? If gold goes up, silver and platinum will go up as well. If gold goes down, silver and platinum will go down as well. Now, there are a few differences, okay? Mostly has to do with the price and where they were, but generally they will follow one another. So, ladies and gentlemen, that is it for me. My name is Justin, Business Development Manager here at Fullerton Markets. I hope you guys enjoyed our class, and I look forward to seeing you all in our other classes. Thank you all, and goodbye.